What's going on, guys? JPA Trades here, and kicking off our first episode of our Leverage SPY and QQQ portfolio. So kind of what we're going for here is just to see how much we can do with a $1,000 account. Goal here is just to outperform the S&P 500, and maybe a lot more, but not really saying like 1,000 to 1 million, 1,000 to 5,000, just 1,000 to whatever we can do. Just want to kind of go out here, execute some trades, and show that, hey, there's a lot of vehicles out there that you can use. That's just normal stuff. You don't need to use any like funded accounts or anything special. Just wanted to show you kind of some cool little leveraged ETFs, indexes, which you can use and take advantage of. So just going to do like a little quick overview. So TQQQ is 3x leveraged. QQQ trades at $45, $46 as opposed to QQQ, which is $396. Reason this can be useful is if you get up to a point where you can get 100 shares, you can buy and sell covered calls, covered puts, and it's kind of a really good vehicle of making a little bit extra money and building up that wealth you have there. So that's one of the big advantages. Also, 3x the move. So if it goes up 1% in QQQ, TQQQ, you get 3%. SQQQ, as QQQ goes down, SQQQ goes up. So we've been selling off. So it went from 13 to 15. So in a couple days, you could have caught a really nice move there. What's the exact percent on that about? So yeah, 13% in a week. So that's a really awesome move, especially for something that's trading off an index. And then XXX, 4x leverage SPY, trades around 27 as opposed to SPY, which up around 467. So this is where I'm kind of saying if you get to the point where you can buy 100 shares worth, you start to really get some flexibility with those covered calls and covered puts and just a little bit extra way to make some money. But what we are doing right now is we got $1,000, so we don't have enough for any covered calls or covered puts and anything. So we're just doing shares. Hopefully we can work it up to the point where we get $1,300 to kind of do SQQQ covered put, call or covered put, or $2,600 where we can do an XXX covered call and covered put. And I don't actually know if they've made the covered calls options yet in XXX because it's still kind of new, or if they will, but we'll be on the lookout for those. But let's go ahead and look at the first trade we took so far, 2024, which was we bought at $26.93 at the end of the day on January 4th. So let's go ahead and pull up XXX. Switch this back to our nifty 90-minute chart. So end of the day, January 4th, right about here-ish. So right off the bat, we got a pretty good move back up. We're about up 2.5. I think it was 2.5, 2.6. I think I only posted a 2.2. But it was a pretty good move, but I was looking for a little bit more, and I think we can still get a bounce, and I'll show you why. So I'm not going to really chart anything on the leveraged ETF charts themselves, which they should be pretty similar to SPY or anything else, but I'd rather just use the main index I'm working with and then go and look at the leveraged ETF. So I'm not going to look at just SQQQ before I go to short QQQ or SPY. I'm not going to look at just TQQ before I buy QQQs. I'm going to look at the actual indexes themselves and see what's going on. But what I'm going to show you here, and I posted a chart of this on Twitter earlier, it was this trend line I wanted to hold. So drag it down to the bottom. And you could also do kind of the spread out one, but just for argument's sake, it needs to be about, get rid of that there. What are we doing? About here, which we did hold, and I could pull it up. We went under it initially in the day and then went back over it. But I want to see this trend line hold, and I'd like to see about a 50% retracement of the move. So just from the top down to the bottom was 2.3%. I'd like to see at least a 1% move back up, which would help us get a 4% move in XXX, which would be a really great start to the challenge account, the leverage account just across the year. And 4% is a pretty good rate of return. I know right now you're getting 5% interest on anything, but we're going to be compounding these gains. I said someone had a really funny comment here in the account, which was, are you going to use it the whole account the whole time? and I said we call it max utilization. There we go. I call it max utilization to sound sophisticated. And the reason I say this is these aren't really like just junk companies you're putting money into and waiting for a huge rate of return. These are actual indexes that, in reality, unless the United States of America and the whole world falls apart, your position's not going to go to zero. Like, it's going to go down a lot faster, but as soon as SPY or QQQ recovers, you'll be back in the green again, as opposed to an option where you get to the end of the week, all your money's gone. You don't want to be putting your full account in there. And in reality, you probably really don't want to be putting your full account in this every time. But it's kind of a safer vehicle that can still yield pretty good returns. It's just going to take you longer moves. But in this, if you're putting $1,000 in and you get 4%, as opposed to you put $200 in and you get 50%, your gains are a little bit closer than what you might think. And it's kind of you can wait it out. Like if you're wrong initially, which we didn't get that 2% move right away and it went back down to 1, well, we're still going to wait it out because I think that bounce is coming and it should come, and we're just going to see what happens. And I haven't really set in mind kind of a downside target, but if we kind of get a consecutive close under this trend line here, I'll probably just cut bait on the shares and then look to add something else again and just kind of keep it moving. But the goal is to kind of find a good trade, get your 4%, get your 3%, whatever it has to be, and then get out and wait for the next move to happen. And in the beginning, it's going to be pretty slow, but like everything in investing, it's a snowball. So if you start kind of getting those wins kind of rolling together, and the beginning of it is always going to be the hardest, but if you can kind of keep those wins rolling together, you start to really build up faster than you think. And then that 4% move on, this will be weeks, years, however long down the line. But if you get to 10,000, 4% move on that, and then all of a sudden you're getting $400. Well, that starts to move the needle a little bit for people. So that's what I'm saying is this is just a good practice exercise. You can use whatever size account you want, $100, $1,000, $10,000, $100,000. It's all about what works for you, but I think this is kind of a good exercise, good little review we're going to do throughout the trading year. If you like this video, leave a like down below. If you have anything else you want me to kind of touch on, comment it down below. And all in all, guys, hope you have an awesome 2024, and we'll see you next time.